Hello there, Maverick traders. Look at that date, 2024. We are into the new year, and this year the Santa Claus rally did not happen. Typically, the last couple of days of the year, the first couple of days of the first, typically gave us a 1.3% upward move, and this year it was negative 0.9%. So Santa Claus rally did not come, but let's see where the market is right now. In this video, we are going to be going over what happened today, looking at the news. We're going to take a look at all the movements. Then we're going to look at the markets as they are now. We have a saying at Maverick, trade the market in front of you. Not the market you want it to be, not the market you think it should be. We are all about technicals. And then I've got 2 bullish trades for you and 1 negative trade for you to share.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
So today was a decisively down day at the end, but I'm going to show you an intraday chart here in a second. And I just want to show you kind of what we've been seeing over the last couple days. But let's take a look at the news first. What was the news? Well, we had bond markets and we had the dollar continuing to bounce. This has been the main driver to the higher stock market over the last 2 months. If the dollar and the 10-year yield keep going higher, this market is going to keep going lower. There's an absolute negative correlation going on between these two. And again, if they keep moving higher, it is probably going to put more pressure to the downside. But let's take everything in perspective, because this is the first down week in 9 weeks. Now, I know we have one more day. I don't think it's going to bounce back and become a positive week by the end of this week. Let's keep this all in, again, big picture. We've had 9 up weeks in a row. If I asked you, just at any random time, the stock market has gone up for 9 weeks in a row. What do you think is going to happen this week? Just by default, you say it probably pulls back a little bit. Yeah, and that's exactly what we've had. But if we take a look at the numbers today, these numbers were much better through most of the day, and then they really weakened. So we had the Dow basically flat. It was positive all day until the very end. We had the S&P down 0.34%. The Q's down 0.5%. As you can see, this is a mild down day across the board. We had oil down a little bit after a massive rally yesterday. Gold up a little bit. If we take a look at the advanced decline line, this is something I've been watching very closely for the last couple of days. On Tuesday, we had a pretty good advanced decline line, meaning, yes, the markets went down, but it was really the Amazons, the Googles, the Microsofts, the Apples, the Nvidias. Those got hit, but for the most part, the average stock was doing pretty good, which is showing me that, okay, this is the markets are coming down, but it's really just the big cap tech. The rest of the market is still getting bought. Yesterday was a different story. Yesterday was a pretty ugly advanced decline line. I want to say it was running around 75% decliners. That all of a sudden told me, okay, this sell-off is getting a little deeper. It's getting a little bit more nasty. The markets went down today, but look at this advanced decline line. This is almost 1-to-1, and we'll take a look at the heat map, and you'll see there's still some buying out there. Overall, this market is still bullish. Still 78% of all stocks are above their moving average. So let's go in and take a look at the charts, and there's no doubt that we've had a pullback. We've had a pullback, and we have not bounced at the 20-period moving average. Earlier today, this was a nice green candle, but by the end of the day, it had fallen. And I'm going to show you an intraday chart here, and you can see that for most of the day, things were pretty good, and then really right at the end, the selling came in. That is a sign and a signal that people were trying to sell all day long, and then at the end of the day, they could no longer sell on the bid or on the ask. They had to go to the bid and just sell at market. That's what's telling you is there's still selling out there. Today told you there's still more to come in this pullback. But if we take a look at technicals, the very first technical challenge was this 20-day moving average, which was also this support line that we've had for the last 2 weeks. That has been pierced. There's no doubt about that. It's been pierced. We'll take a look at the NASDAQ. The NASDAQ is even worse. Next line we're looking at here is support at 4,600. This is 2% away. We could still have a 2% pullback, and it would still be a bullish market. Not as bullish as we were, but still bullish. And it really isn't going to be until we break below the 50-day moving average and we start to see some crosses. That's the first time we can say, oh, this market is now bearish. So technically speaking, and again, I'm not saying like technically speaking like we always say in our life. I'm saying based on technical analysis, this at this point is nothing more than a pullback. Look, it could be a reversal. That could be the top. Here's the thing. We have no idea. We have no idea. And for any of us to say we know is a lie. We trade the technicals at Maverick. And right now, we are no longer at a +3. We're at a +2. We might go down to a +1. It's telling us to back off our bullishness, like we've been very bullish for the last 2 months. Just back it off. But there is nothing in this chart telling you to be bearish. Absolutely nothing. Let's jump over to the NASDAQ. Now the NASDAQ, it's a little bit more advanced, a little bit ahead of the S&P. You can see we broke this line a couple days ago. We broke the 20-day moving average a couple days ago. Where's our next stop? Well, next resistance or support line is 393 on the Qs. That's basically 1% away. This candle, not a good candle. Again, this candle's telling you that at some point there were buyers in the morning, but by the end of the day, they got overwhelmed and we closed down at our lows. There is more likely a deeper pullback coming here in the next couple days. But until we decisively break the 50-period moving average, technically speaking, and again, I'm talking about technical analysis says you should still be more bullish than bearish. If we go in and take a look at this heat map, I want to point out that there were some areas that have done really well, and I think there are areas that will continue to do well. Healthcare has been the best performing sector over the last couple of weeks. It did awesome today. Look at this. That is a sea of green. Take a look at industrials. We've liked industrials. Industrials was mostly green. We've liked financials. Look at financials. They're mostly green. What is mostly red? Big cap tech. And we talked about this, about the January effect. In January, all the people that wanted to sell their Metas, their Googles, their Amazons for big gains that they bought last year, they're not going to sell them in December because they have to pay taxes on that gain in a couple months. They're going to sell it in the first week of January. We have seen these stocks come down, but the rest of the market has done pretty well. I want to point out energy had a nasty day today. Nasty day. This is a sector that I was just about to turn more bullish on. And after a day like today, I definitely have to wait a little bit on the energy sector before I can really turn to a little bit more bullish outlook on that. We have been downgraded from a +3 to a +2. We could go down to a +1. We'll see. But again, I'm going to keep saying this. If you just trade technicals and you throw out your opinion, you throw out, hey, I had some long positions that are now in a loss. I'm not feeling great about it. Look, I understand that. But that's not about the analysis of the market right here, right now. The analysis is we still have a couple more down days to go before this pullback is bought. Now, again, we don't know if it's going to be bought, but all the signs are telling us it's going to get a little bit worse before we have any sort of bounce here in the near future. Let's go in and take a look at a couple trades. Now, obviously, with that outlook, I'm not looking to be a superhero and jumping in a whole bunch of bullish trades while this market is going against us on the bullish side. And look, I'm not going to go and be net bearish on this market either. This is a time where you just understand we just had a huge run. We're pulling back. There's not a lot of reason and impetus for you to need to get into something right here, right now. Let this run its course. These things happen all the time. Markets move in waves. We know that. Let's let this wave recede and see what happens. Let's look at some trades.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
When I went out looking for trades, I did find way more bulls than bears. Again, I always like to use this to tell me if I'm on the right side of the market. If I am net bullish and I think the market's going to go higher, and I go out and I'm finding tons of bears and not very many good bull setups, it tells me, hey, your market outlook might be wrong. But in this case, I found some really good bullish setups. And the first one is MetLife. The financial sector is looking great. It has looked good. It's looked good during this pullback. I mean, take a look at these 3 candles this week on MetLife. 3 green candles. Yes, yesterday was a down day, but it's still a green candle. This trend is just really nice. We got a really nice trend to the upside, and we've got an ascending triangle pattern that tried to break out today, but the market brought it back down. Okay, this thing wants to go. It's just the market is holding it back, but it's still creeping higher in spite of a very negative tape. If and when the market turns around, I like this one up to 69, maybe even up to 70 if I give it some more time. So for me, the trade on this one is going to be either straight vertical, 67, 69. If I want to give it more time, I can always do a diagonal call spread. And again, I'm going to do it at 68. So again, I'm going to buy a couple weeks, maybe even a month of time on my long calls. So it's 65 probably, 65 long call. Sell this Friday 68, meaning that if it stays in this area, we're going to have a nice little profit. If it stays in here. If it takes off and runs, guess what? We still have a profit. If it does back down below probably 66.50, it's going to start to, become a little bit of a loss. And of course, we all know you've got to have your risk management to deal with these situations. So again, Met is saying, I want to go up in spite of the market. Another one I found was in the healthcare sector. Now, I wanted to find something in healthcare. And there's been a lot of things that have really taken off. A lot of the biotechs have really taken off. But here I came across this Baxter. We've got a really nice high base here. Now, these high bases, when they end up catching up with the 20-day moving average, this is typically the part where we start to see some better movement to the upside instead of just stagnation. We have a ton of resistance that we're breaking through. It's going to take a little time. This one, I think we just need to give it some time. Same thing here. I love the diagonals in this one. I love high base trades that I just do diagonals on. If this one has 39s, you could go 39, but my guess is there's only 40s on this one. So you have to do something like a 35-40 diagonal call spread. If it stays in here, hey, we're very happy about that outcome. If it takes off and runs, hey, we left some money on the table, but it's still a profitable trade. If it falls, that's when we start to get into some loss. And of course, always have your position management ready for this. And then on the short side, this is a stock in the energy sector. Like I said, I've been really close to getting more constructive on the energy sector. And then yesterday we had a big run in oil. We had like a 3 or 4% run in oil. The whole sector was up. Today, oil went down like 0.5%. So if you take a look at the 2-day return, oil is still up like 2.5%. Here's the problem. On oil going down 50 cents, the energy sector went to, you know what? It absolutely died and crashed. So this is a stock I've never traded before. MGY, Magnolia Oil and Gas. Of course, I don't want to be so aggressive on this because there is a ton of support down here. Ton of support. But I'm liking this 20. I'm liking this 20 here, and I want to do a 20-21 bear call spread. I'm probably going to get in about 70 cents. That means I'll have 70 cents of upside potential with a 30 cents of downside risk. If it doesn't fall anymore and it takes off back up, yeah, it's going to be a mass loss for sure. But if it stays here, drifts down a little bit more, now we're just starting to make some of the 70 cents. Will it go below 20 by the January 19th expiration date? Maybe, maybe not. But look, I've got a really fat credit in there. If it just goes down to 20.40, that's going to be a nice little gain on this little $1 spread. Tomorrow is the first Friday of the month, which means it is the payrolls report. The estimates are 168,000 jobs, 3.8% unemployment rate, which is up 0.1. The market wants to see that unemployment rate going up a little bit. And I know it's a weird thing because most of the time the markets like it to go down, but they're going to be okay if this unemployment rate goes up into the 4.1, 4.2. It can't go past that. They don't want it to go past that, but that's really where they want it, plus 3% in wages. Like I said earlier, we could have some more downside, but if this payrolls report comes out, and this is what's called a Goldilocks number. Goldilocks means it's not too hot, it's not too cold. If it comes out right around these numbers, I think the market will look at this and say, okay, we're still in Goldilocks. We're still in this area where the market is strong enough or the economy is strong enough and the Fed is out of the way and possibly going to be cutting rates. If we get a good economic report tomorrow and the market likes it, maybe that was the bottom of this pullback. If it doesn't like it, we could have at least 2% more before we test the next support. That is a market roundup. Thanks for joining me. Goodbye, everybody.